And doing it this way is why it's called parabolic management. Now, a parabolic management type or parabolic trade management is a good way to approach managing your trade when you've got a little bit of an extended target. Now, you don't want to get caught up in the initial noise of the market. Sometimes when you place a trade to begin with, the market doesn't always move in your favor right away. And if you start managing your trade too early, you could be out of a trade before you even got a chance to really be in the trade. But then after the trade has progressed a little bit, there is going to be a chance that the market has moved so far and will need to make a pullback. So you've got this market that's moved, and because it's moved as far as it has, the pullbacks are generally going to be bigger. So instead of just a little pullback or a little correction and a continue, you're going to get a much bigger pullback. And the parabolic management of this is going to allow for you to get stopped out without giving too much back. So if I clear my screen and we start this from scratch, what we're looking at is an area right in the middle here. We've got this trade that we could be looking to take. And you can see that there's a section in here where the price just doesn't go right off the bat. It goes sideways, it meanders a little bit, but it doesn't have a lot of momentum when we get into this trade. Now, if we take a look at the process, we've got the downtrend as we've got the crossover. The red is below the blue. So we've got that trend down. We've got the pullback into these moving averages, and our short would be right in here. So we've got this short trade that this gray candle gets us into. But what happens is we get into this trade and it ends up going sideways for a little while before it even gets going. So we get into the trade, it closes in profit, but then we get a pullback, and then we get a move back down, and then it's a pullback, and then we get a close back into profit, and then we get a pullback. So we get this ranging market that just goes sideways. And using parabolic trade management is going to allow the market to do this. Now, you can also see that as the market progresses, we do get a fairly generous pullback that could take us out of the trade. So as this trade progresses, we don't want to give back too much of the profit that we've made on this trade. Now, if I were to draw this just as simply as possible, we've got this market that makes this move down. Now, the stop loss goes above whatever high that the short trade is going to present us. So we've got this swing high. Now, instead of moving the stop loss along with the market, what we're going to do is ease into it. We're going to slowly start moving the stop loss. So the path of the stop loss is going to look more like this. It's going to move away from the price and then start getting into the price. And this is where the parabolic term comes from. We've got a wide section at the top and we've got a narrow section at the bottom. Now, the parabolic SAR, or the parabolic stop and reverse indicator, shows us the essential movement of it. It's not an indicator that I would use for this, but it does demonstrate basically the shape of this. So if I add a parabolic SAR, I'm just going to speed run the application of the parabolic SAR. Now, this is a good example of how a parabolic stop and reverse moves, and this is what a parabolic trade management would move like. This is a nice example of it down here. Another speed run, changing the color and removing the moving averages. So we've got a stop loss that is at the swing low. And as this price continues to move up, the stop loss moves up, but slowly. It starts out wide, and then it ends up getting closer and closer to the price until the price will knock us out. Now, again, the parabolic SAR is not really something that I would use, but the idea of a parabolic stop is exhibited by the PSAR quite nicely. So if we go back into this section where we were looking at initially, what we're looking at is an entry, our stop loss. So we've got a target in this area here. The stop loss, as this price moves, is going to stay fairly wide. It's going to stay far away from the price. But as this market continues to move, that stop loss is going to get closer and closer. Now, I think the best way to demonstrate this is if we look at this on the replay. Setting up the replay, adding the moving averages and the dots. Now, if you're using the dots as your stop loss, there's nothing wrong with that. But when we're looking at a parabolic version of trade management, we want to start fairly wide and then get a little bit narrower. Now, we know because we've seen it that the price is going to drop into this area in here. So what I will do is target just above that swing low. So with that, I'm going to use my short position tool. We're going to go short underneath this candle if that gets triggered. The stop loss is going to be just above that candle. And I'm going to look for this as a target. And I don't want the price to hit the target in this example, so I am going to extend that a little bit. And from here, we're going to play this trade out. So now I'm going to use the replay. I'm going to move this forward a couple of steps. We're instantly in the trade. So this first candle gets us in the trade. We've been triggered. Now we are a little bit in profit. Our stop loss is going to remain at the high. We're not going to do any trade management just yet. Now we're going to progress this forward a couple of candles. So let's go 2 candles. The dots are underneath where this initial stop loss is. But we're looking at parabolic management. So right now, I am not going to touch the stop loss. I want that market to start moving in the direction of the trade. I don't want to be reducing the risk on this trade until I've given this trade the opportunity to move forward a little bit. So let's print a couple more candles. And what we're seeing is more of the same thing. I'm just going to leave my stop loss where it is. Let's print a couple more candles. Now we are starting to move in the direction we want. Let's print a couple more candles. So we've got 2 more candles and we are starting to move down. So that's what we want to see. We've got the sideways market out of the way. So now I can start managing the trade with the dots. I'm going to use the dots until the market gets closer to the target. We've allowed for this market to move by keeping our stop loss high and out of the way. Let's print a couple more candles and we're seeing that the price is moving along nicely. So I am going to manage it with the dots. The dots are going to keep me far enough away from the price to keep me safe. They're not going to crowd the market. Print a couple more candles and see where we're going. All right, so we're looking really good here. I'm just going to continue moving with the dots. A couple more candles. We are dropping quite nicely. So because we are getting close to the target, I want to be able to secure some of my profits. Right now, the stop loss is in profit. And if I was using the dots, we'd be about half to 1. But right now, because we are moving as well as we are, and we are using a parabolic trade management for this, I'm going to start getting closer to the price. So right now, I'm right in between the dots and the price. I am securing a little bit more profit with this. So let's print a couple more candles. We are doing well, and I'm going to get even closer and print a couple more, and we are still moving very nicely. And we can see we've got a little bit of a ridge here across the top. I am going to extend this box to the side, and that is where my stop loss is going to be. It's nice and just tucked over the top of these highs. So if we do get stopped out, we're looking at about 2 or maybe 2.5 to 1 at this point, and that is going to make for a very nice trade. So let's continue this a little bit more. That next candle takes us out of the trade. So using this parabolic trade management, we were able to get into the trade and then manage it in such a way that we were able to secure some profit on this. So we got into the trade initially with our stop loss here. And as these candles progressed, I didn't start moving the stop loss until we ended up in this area here. From here, the stop loss came down into the dots, and then we went underneath the dots and we ended up getting stopped out far below the dots that we would generally use for trade management. This is parabolic trade management. I am sure that this is a term you've probably never heard of before. It's not a term that very many traders know about. But when you're managing a trade that has an extended target, using a parabolic trade management technique is always a good idea. If this is something that you want to consider, if you want to consider parabolic trade management, it's something you'll want to test a few times. So if I draw this one more time, just with a couple of lines on the chart, just scoot this over a little bit. Parabolic trade management in a downtrend looks like this. And parabolic trade management in an uptrend will look like this. As the stop loss starts, it gets managed very slowly to begin with, and then it gets managed faster and faster, and it gets closer and closer to the price, the closer we get to the target. If you like this video, please give it a like. And if you haven't subscribed, please do that. If you are a member of the UBFX family, I will see you in the Discord. And if I don't see you there, I will see you in the next video.